Hello, Tyler Bryden here. Hope everything's going well. Today I get to talk about everyone's favorite topic here, which are interest rate hikes in Canada. There was an expected 0.75% increase, and what happened, the news that we've just got, was it was actually a whole 100 basis points that actually was deployed. So this is the first time since I think 1998, the biggest interest rate. This is the last time that 1998 was the last time that was done, and obviously the goal here is to curb inflation. So I've got a couple articles, a couple links as always. I'm sort of examining this, watching in interest and horror and disgust as all this, and then what that means for obviously myself personally, what that means for Canadian, what that means for the housing market, all of the good stuff that this sort of touches upon. And this was, again, a bit of a surprise, a bit of a shock for people. 0.75 was already a big hike and going to be the largest one in a long time. And then this is another 0.25 put on that. Now, talking about, and there's a quote directly from Trudeau here, about sort of the global forces at play, Ukraine, supply chain issues, Russia, all these things are sort of touching it. And I think the sort of sentiment around this is with all these global forces, is this interest rate shift, which is punishing a lot of Canadians, is this actually going to have an impact on inflation? And really the goal here is that piece is to decrease inflation, which I believe is sort of sitting, which they sort of expect to peak at 8%. Here over the next few months, and then start to drop, and then get back to the target of 2% by 2024. Now, do we think that's going to happen? Do we know that's going to happen? No. There's been lots of goals in the past that have been stated. That doesn't necessarily that these goals have been true, but that is the sort of work that is being put together here. So the next interest rate hike is at I guess policy rate. Maybe it's not a hike, but almost certainly it will be, even if it's a smaller one, is September 7th. So there's a little bit of, breathing room or processing of this. How does the economy take this? How do people take this? Evolving world sort of events. How does this all come together before September 7th? And so I think there will be definitely a lot of sort of scrutiny and adjustments before then to figure out what's the next best step. Now, lots of sort of stories that then revolve around this. Again, I'll put all these as links in the video. But CMHC, so Canadian Housing and Mortgage, says that a recession could be on the cards. Many people think that we are already in one, but they're just saying, and then that definition is like 2 straight quarters of negative GDP. We're already sort of resetting what our expectations are for GDP, not GDPR. I'm still in compliance and security mode here. And then really what they're seeing here is home prices to fall. So 5% from 2022 peak by the middle of next year. And then so the prices and then the sales, an estimated 34%. So lots of comments coming in this. A lot of people who have bought houses in the past, year, 2 years, 6 months, are going to be in an interesting place. And I'm one of those. I bought a house, Mississauga here. At one point, this was completely, trajectory continued up. I think we bought sort of October, November here. So a lot of, ways for... There was a lot of spike up after that, which was generally sort of artificially inflated, and then that's now coming down. The question is, how far does it come down? For us, 3-bedroom, 945 makes pretty in line with what we saw, but only a few months ago that was 1.1 million. So within the time that we had bought the house, there was already sort of significant appreciation on it, and the extra sort of So you can see, like, again, just looking at ranges like over year still increases, but monthly and then quarterly significant drops in that. And then other complexity for us, which I think was probably one of the dumbest things that I have ever done. And you can't really blame anyone because you're the one who goes through the decision. But we took a variable rate mortgage, and then with that variable rate mortgage, there was there's sort of two kinds. One's where your payment continues to go up, and then other ones where your payment actually stays the same, but you're paying more on interest than you're paying on principal. And within the last few months of these adjustments and aggressive adjustments, the amount that we're paying on interest versus principal is, pretty astronomical. And so that is only going to continue with significant impact from this 100 basis points that was just added today. And I think there are a lot of people in this situation. We had sort of this option to choose a fixed rate and a variable. I advocated for a fixed rate based on some of these statements that were sort of coming out, and my just sort of pessimism of where we were economically and what the Canadian government would do, and sort of how we just sort of followed the US to I was very skeptical that variable rate mortgage. Our real estate agent advocated for us to take that because we had such a low rate and sort of showed us historical things. We listened. I wish we hadn't listened just now. Maybe we're still, in the end, this plays out, but I'm actually very unsure. And also the math, once you do that, seems relative. I mean, I know that there's a way to do it, but there's some complexity on that math there that is frustrating, and a lot of work to do to make sure. At the end, I'm not even sure I want to see the number that comes out there. So definitely checking out my Twitter. Oh, it actually is loading. For once, you can see, sentiment overall. I'm interested in tracking this. Do a lot of sort of data scraping and analysis of what's happening on Twitter. And this makes me want to do a little bit more of that. Just maybe, I don't know if it's cathartic. I don't even know what it is. And we'll see the impact on this. So these some of the top tweets specifically. I was looking at the hashtag interest rate, but Bank of Canada. Is a little bit more localized to Canada. So Bank of Canada raised interest rates. All of my friends are sharing macroeconomic analysis on their Insta stories. So if you're following real estate agents on Insta, then good for you. I hope you're learning something. I hope that I'm learning something. And then lots of sort of commentary. Some of these commentary maybe should be taken with a grain of salt. Maybe some are valuable insights from people who are part of the space or have good knowledge of it. And as always, I'm a huge fan of Reddit. Sorry, I've got a nice little train going by here. And Canada Housing, relatively pessimistic subreddit, but does have some really interesting insights in it, lots of threads being published here. So again, we'll link these in the comments in the video. Main top comic usually having some indicator that it's worthwhile, that this will affect the housing market, they say, big time. So I don't even know if I have too much else to say. Just overall, this is the first time that I have been part of this, and then the first time going through this as a housing owner. This person wants to keep dropping. Some people just want the housing market to crash. At one point, that was me not having a house. Now, obviously, having a house, I understand a little bit more the consequences of that and hope that it doesn't happen, frankly. And so I'm learning a lot along the way, realizing that, I'm in a situation where personally still going to be okay, even if we're just paying more in interest than we like, and not paying down principal, or then using sort of chunk payments of principal, sort of a 20% allotment each year to make sure that we're making a dent in it. But overall, it's been a very interesting sort of journey, and there's this idea that you should just get into the housing market, and I think that is fair when we do some analysis on this versus rent and then the outcome of it and all those things. It still makes sense, and we're happy here. We've got a great location. There's a lot of value in the area that we're in. The house is nice, lots of room for improvement, backyard, all those things, but it's still a scary time, and there's still so much volatility in the world, and there's so many sort of macro trends, macro events going on in the world that impact all of this, that I'm not sure how much we have control over. And, there's this one layer here, which is a sort of housing. And then as myself, as someone who is a business owner, doing software, who has, looked at fundraising, what is the impact on that? And so we're already seeing, massive pieces on companies' valuations, bridge rounds for when they're trying to raise money, the terms that they have to take on, because as these interest rates go up, it impacts the economy, it impacts everyone's money, and then investment is less available. It only goes to a specific amount of companies. All these other factors that don't just hit myself from the housing market perspective as a house owner, but then also as a business owner, and depending on different outcomes that I want for the business, what is the best path to take. So those are a couple of things that I'm working through here today, along with this wonderful 100 basis points interest rate hike. If you are following this, if this is impacting you, even if it's not, we'd love to hear what you think. I'm excited to continue to see sort of YouTube channel grow, continue to sharing these videos on LinkedIn. Very excited to see over 50 subscribers now, and getting feedback and comments and those things. I'm feeling great overall. This is probably not my most interesting or positive or optimistic video, but I think it is worthwhile covering, and I definitely wanted to do a little bit of research before this video just to make sure that a couple of my thought processes are accurate or along the line. So if they're not, feel encouraged to send me a note. And thank you again for checking this out. I appreciate it very much. Start bread. Bye-bye.